Welcome everyone to today's video in which I am going to cover Sprouts Farmer Market as it has been suggested by a couple of you guys. Now the stock is down 62% in the past year and they are reporting earnings tomorrow. Now if we take a look at the 5-year chart, it is really interesting because this company jumped from around $20 per share all the way to $173 per share and then has fallen massively to $66 per share. Now the market cap is $6.4 billion, so this is not a big company by any means, and they are generating $8.6 billion in revenue, up 16% year over year, net income $513 million, 46% year over year, and they are trading at a PE ratio of 12, although we'll talk later about the valuation with the discounted cash flow model. Analysts have them rated as a buy with 93% upside. So right away, things look very interesting if we regard analyst rating and the growth this company had in the past year, but let's take a deeper look, starting with their financials. Now this company has seen very good revenue growth in the past 10 years, growing from $3.5 billion to $8.6 billion today. And last year, they grew by 16%, which is amazing. And regarding their revenue growth, I want to point out a statistic that we saw last quarter, which is comparable same-store sales, 5.9%, which is huge and very important because when you are in retail, because if you don't know, Sprouts Farmer Market is a shop that sells fresh and organic products. It is very easy to grow just by opening stores, which by the way, they opened 9 stores last quarter. But it is important that the organic growth of the business keeps growing, so I am very impressed with this statistic. And if we take a look at their profit, net income has also seen very good growth, and especially in the past couple of years, as you can see here, currently generating $513 million in net income, and their free cash flow has also grown very nicely, again, especially in the past couple of years, and currently generating $457 million. So we need to ask ourselves the question, if this growth right here is sustainable. Now they have amazing margins for a retail store. Gross margin is currently at 39% and keeps growing. Profit margin is currently at 5.9% and free cash flow margin at 5.2%, although on average they have done between 4 and 6% in the past couple of years. And those margins are very impressive for a retail company. What you have right here on screen is Walmart's free cash flow margin. For example, they have between 1 and 2% free cash flow margin, so that you can see that this is normally the usual on the retail space. So having around a 4 to 5% is very good. Another thing that is very positive for investors is the number of shares outstanding. As you can see, Sprouts Farmers Market has bought back a ton of shares every year. This is very positive for investors because you share the profits of the company with less people and you own more of the company. And they can afford to do this because they are in a great financial position. As you can see in this chart that they provided last quarter, the green line right here is the operating cash flow, currently at $577 million. On orange, you have the share repurchase, $392 million, and on green, capital expenditures, so $194 million. So they are in a great financial position. And if we take a look at their balance sheet, they have $322 million in cash and $1.86 billion in debt, which might appear like some debt. However, because this company is in retail, there are a ton of leases on this debt as they are opening a lot of stores, so I wouldn't worry about this amount of debt. By the way, if you want access where I've shown all the stock data in this video, you have my code to stockanalysis.com in the description. And now, in order to calculate the intrinsic value of the company and potential future returns, I use my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $66 per share, middle $97 per share, and high $138 per share. And the stock is currently trading at $67 per share, which means that if my low assumptions occur, you would get a 9.7% annual return on your money, middle 17%, and high 24%. So I think we can conclude that according to my assumptions, the stock actually looks very attractive in terms of valuation, and I think my assumptions are reasonable, as I have the company growing revenue between 5 and 8% annually over the next 7 years, And actually, if we take a look at what analysts are expecting, they are expecting high single-digit growth for the next 5 years, between 6 and 10%. Then, in terms of profit margin and free cash flow margin, I assume between 4 and 6%. Keep in mind they are currently doing 6%, and I assigned the PM price to free cash flow at the end of the 7 years of 15, 17, 19, and I also assume they buy back 2% of their shares annually, which is what they have been doing consistently. If you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And in conclusion, I think this company has tons of potential in the future, and I will be buying if the stock price drops on earnings. I believe it is in a great sector. The market cap is low at $6 billion, meaning it still has a lot of room for growth. Their revenue is growing, their profit is growing, and the valuation looks very attractive. By the way, the last thing I want to mention, and another reason why the stock has fallen lately in this past year, is because some investors are accusing SFM stock to violations of the US securities laws. However, this is not a criminal or a government regulatory investigation, and the investors are claiming that because Sprouts gave lower guidance in the last quarter in 2025, the stock fell around $22 per share to $81, but I don't think this will go any further, although something to watch out if you are an investor of this company. I hope you found this video valuable. Let me know what you think about Sprouts Farmer Market in the comments, and I'll see you in the next one.